It's finally Wednesday and it's the most eventful day of the week. But most of the news happens later on today, but that's okay because I'm here to get you prepared for it. Starting off the day, however, pound CPI numbers came in even lower than expected, dropping all the way down to 10.7%. The United States FOMC meeting is happening today at 2 p.m. Eastern Time, so be prepared for that. As the new US interest rates come out, it's going to cause some massive volatility in the markets regarding the US dollar pairs. Interest rates are expected to be raised 50 basis points up to 4.5%, but the CPI news event that happened yesterday was very positive for inflation, dropping it more than what was expected, so it'll be interesting to see what the Fed decides to do. Rounding out the day, New Zealand GDP numbers and Australian unemployment rate data will also be released, so keep your eye out for that. Be careful in the markets today, as there's sure to be a lot of volatility for most currency pairs following these news events.
All right, so here we are starting off in the Edge Finder. Really quickly, I want to go ahead and show off the brand new pound interest rates. So if I click on GBP USD or any of our pound pairs, we can see right here under our fundamentals section, inflation, GBP inflation has now dropped down to 10.7%. So that's good for the UK and good for the pound, dropping that inflation. But let's see here, in the watch list, or you know what, no, let's start out in the market heat map first. Let's see how our pairs and indices are trending so far today. So far, US dollar pairs, we have $2 pairs that are down, USD JPY and USD CHF, both down basically 0.5%. NZD USD is also down a little bit. GBP USD is actually up 0.28%, possibly on those that new interest rate news. Indices are looking pretty. The JP225 is up, which is nice. The Nasdaq 100 up 0.56%, S&P up 0.54%, and the US 30 up 0.45%. Looks like oil is actually the biggest mover of the day so far, but only up 0.74%. So not a whole lot of movement in the market today so far. Euro pairs are looking kind of split. Euro NZD is up 0.4%, Euro JPY down 0.3%. So again, not a lot of like really big movers yet. Everybody may be waiting on that US FOMC data, but I'm sure that Australian interest rates will cause a little bit of volatility, or not interest rates, I'm sorry, Australian unemployment rate. I'm sure will cause a little bit of volatility there. For Australian pairs, our Swiss franc pairs are all down today. And so are our yen pairs. Yen pairs are down. CHF pairs are down. JP225 is up, however. So people investing in the Japanese stock market, I suppose. Aussie pairs are looking up so far. Aussie NZD up 0.41%. Aussie JPY down 0.3%. New Zealand dollar pairs, again, NZD JPY down 0.63% and GBP NZD up 0.49%. So yeah, we do have New Zealand GDP numbers, which could cause a little bit of a spike if those GDP numbers come in good or especially better than expected. And Australian unemployment rate is also coming out later today. But the big news event, of course, is the United States FOMC meeting happening in a few hours. So let's take a look at our currency pair buys and sells before we get into that. NZD CAD still our strongest buy so far. CHF JPY is looking like a buy. NZD JPY is looking like a buy. NZD CHF and USD CAD all scores of +5. NZD USD +3, Euro JPY +3, and then our sells, we have Aussie CHF and CAD CHF with scores of -4, and our strong sells still unchanged. GBP NZD, Aussie NZD, Euro NZD still strong sells. So what do we want to take a look at here? We do have Australian unemployment. We do have New Zealand GDP growth, but of course we have US interest rates. And that is, of course, the most important news event of the day. So perhaps USD CAD, although I know I already looked at that earlier on in the week. You know what? We'll do NZD USD because we will have New Zealand GDP growth. So because we will have New Zealand dollar GDP growth numbers by the end of the day. So we'll get caught up on all of our US numbers and all of our New Zealand numbers before two news events happening later on today. So a buy score of +3, COT data and retail sentiment coming out to scores of -1 and +1. Take a look at our sentiment section right over here. Institutional traders currently still very favored long on the dollar, 76.24% long, 23.76% short, whereas very slight favoritism, might not even call it a favoritism on the short side because it's so close to being 50-50, 41.69% long here and 58.31% short here. So very small edge towards the short side from institutional traders when it comes to the New Zealand dollar. Retail sentiment, on the other hand, retail traders are favored on the short side, 77% compared to 23% long. Our seasonality is a score of +1. And we can see that in the month of December here, both our 10-year average and last 5-year average are sitting comfortably above this neutral line here, meaning that historically speaking, this pair tends to trend pretty well in the month of December, trending upwards in the month of December. That was the case last month as well, and we can see that the current year average actually followed in suit with that. And what I find really interesting is we can see that even in the month of December, it's sitting slightly higher than it did in the month of November, and so far that is the case in the current year average as well. So historically speaking, this market is continuing to trend how it typically does in the month of December. Our trend reading is a score of +2, and we can see some solid upward momentum right here with a little bit of resistance perhaps, and then a little bit of a downward move, and it's kind of coming right back up to that level of resistance. And in fact, it may have even broken out, just barely broken out of that level of resistance right here. And our price forecast that predicts that will continue to be the case, creating new highs here. Lastly, our fundamental section is split GDP growth and inflation coming out to scores of -1, and unemployment and interest rates coming out to scores of +1. So of course we do have US interest rates coming out, expected to be raised 50 basis points up to 4.5%, which would shift this interest rate data in favor of the US, which could potentially cause this, or which would cause this score to drop to a -1. And we have GDP numbers coming out, although I don't suspect that GDP numbers are going to surpass the US's 2.9%. So even though we will get New Zealand dollar GDP numbers, I don't expect that it's going to pass US's 2.9%, so there won't be any change there. However, with this new US interest rate data, I do suspect that interest rates will pass New Zealand's interest rate, dropping this interest rate score to a -1. But let's go ahead and cover all of the numbers. Like I just mentioned, New Zealand GDP growth 1.7% compared to the US 2.9%. New Zealand unemployment 3.3% compared to US 3.7%. New Zealand inflation sits at 7.2% compared to the US 7.1%. And again, that was actually just dropped yesterday on our CPI news. And lastly, New Zealand interest rates 4.25% compared to the US's 4%, which we will be getting a new interest rate number today, and we will be getting new GDP numbers today as well.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.